Paytm's listing, the whole day we have been talking about it, and what was the listing price, which was about 2150, and it listed at a discount of about 10%. I think it listed at 1950 or around 1940 or 50 odd numbers, and from there it really fell down and closed with a 20% lower circuit. What that reflects is probably on Monday we will still see the decline continuing for the trend. What happened? What went wrong? While we have seen some of these marquee names like Zomato quoting 40 times their the demand, the subscription, what happened with Paytm? We saw in the gray market itself, we were realizing that maybe it will open at a discount, but nobody expected that it will be a free fall. Look at the Anand Mahindra tweet today. So he says, "My heart goes out to all the individual IPO investors." That means the retail investors he's talking about, who must have been rattled, but he's sure that Paytm will find its right level. There is, however, a silver lining to this sobering debut. It could moderate the casino-like feeding frenzy for IPO listings and help restore the hunt for the true value. And that sums up the true feeling an investor is having after seeing the Paytm IPO. But what prompted me to avoid this IPO, I want to talk about that. And there are three principles I drew from Mr. Warren Buffett as well as Mr. Rakesh Jhunjhunwala, and there will be one additional point, a bonus point from my side. In the video itself we will also talk what separates Paytm, or why Paytm behaved like this while Zomato was bit different case. And the first one is you should always try to avoid IPO. Why? IPO are meant to favor or help raise money to the company. That means all the terms, conditions, KPIs, metrics, they all define them according to what suits them. So actually the real value, you cannot see how the business is working or how the business will do in future. So unless you know these basic details, you shouldn't invest in an IPO, because probably the IPO price is inflated to a huge extent. We have seen that's what is happening in Paytm. The second point is, before investing you have to inquire about the business model. And when we look at the business model of Paytm, if you have seen what Paytm does, I got this snippet from one article on money control, and thanks to Motilal Oswal, they have summarized this very well for us. So let's look at the operations, what Paytm does right now. So Paytm is in payments, so it is well known to everybody: mobile, consumer UPI, bill payments, merchant solutions, QR codes, POS solutions, and payment gateways, or in store payments. That's into the payment segment. Then we have banking space, which includes Paytm Payment Bank. With that, they can do saving and current accounts, time deposits, debit and credit cards, BNPL, buy now pay later schemes, which is again the postpaid section of them. That personal loans, merchant financing. So banking, they operate with various banking partners, and with the help of the banking partner they are able to distribute the loans to far off places where typically these banks do not operate in. Now next is insurance. So if you saw, they acquired recently one insurance company, and they are into distribution aggregation. All policies you can find on Paytm. Then they have wealth management, mutual funds, equity trading, gold. All of these options are available on the platform. Then the e-commerce side of it, where they are present in the form of Paytm Mall, gaming, travel ticketing and entertainment. So travel ticketing is whether you book ticket, a bus ticket, or probably the flight tickets. Entertainment, movie ticketing is also one of the key revenue stream for them. You have to understand their revenue, the income where they get from. Yeah, so this is typically their revenue sources. The subscription on the POS, the device sale, probably the entertainment, the ticket bookings, movie ticket bookings, then bus ticket bookings, merchant GMV, percent of some that GMV in terms of transaction charge. So if these are the income sources, then what is their true income? If I look at their again this article in bit detail, probably I'll get to know that out of their total revenue were about 2800 crore rupees in previous financial year 21, and from their flagship payment services, those all included around 2100 crore rupees out of 2800 crore rupees, which is about 75%. But if we look at other revenue, the other revenue come from booking movie tickets. That was surprising. Booking movie ticket earned them around 693 crore rupees, and this is coming from Redshare data. So thanks to them first of all for digging these all details. Paytm sold movie tickets across 5,700 screens in the financial year 20. We are talking about that. That means their e-commerce Paytm Mall is not earning much. Their mutual funds, wealth management segment not doing much. Their banking side, there is their banking side story also. Let's look at their banking side story. Paytm claims that about 5,800 crore rupees they have in the form of deposits from various users, and the total of 6.65 million accounts. So if we do little bit of calculation, out of this 5,800 crore rupees, 65 million people, that means that comes out to be around 872 or around below 900 rupees figure. Okay, you can do the calculation yourself. So per user the deposit is just 900 rupees. Not sure how much Paytm earn from the Paytm payment bank side. What we just saw is about 2800 crore rupees they earn, and the breakup was there. So in terms of revenue, there is no fixed stream, and you would have experienced that if you look at Paytm. And if you know Paytm we all know as a payment player. We don't use Paytm beyond those things. Probably if one day, and if we go by what Vijay Shekhar Sharma want to do, one day when he reaches the scale, or the India reaches the scale where every transaction starts taking place online, and many of them or large part of that happens through Paytm, probably that day we will have lot of income coming as the transaction charge from from the merchants. Okay, till that time probably the contribution from GMB will again be questionable, because lot of expenses are going on acquiring these merchants, as well as reaching out to these merchants via the sales channel. So that is costing lot of money. And if we go by their own claim, which they did somewhere I think in July this year, they say, Mr. Vijay Shekhar Sharma and the company says that we expect to continue to incur net losses for the foreseeable future, and we may not achieve or maintain profitability in the future. And the prospectus warns, that's we are talking about. If the company says that they don't see any way they can become profitable in the near future till they reach that kind of scale, that was something alarming. And that was the basic principle I drew from Mr. Warren Buffett and Mr. Rakesh Chunjunwala, because they say always invest in the right business. To me, that was not the right business we can think of at the moment. What Macquarie says today itself, dabbling in multiple business lines inhibits Paytm from being a category leader in any business except wallets, which are becoming inconsequential with the meteoric rise in the UPI payments itself. Competition and regulation will drive down unit economics and or growth prospects in medium term in our views. Unless Paytm lends, it can't make significant money by merely being a distributor. We therefore question its ability to achieve scale with profitability. So they set the new target around, I think, 40% down, right? Now, as I said, I will give you one bonus point which to me was very important, and that is regarding the fintech space. Now we can safely say that the proof of the pudding is in eating. We have some examples now. We have seen Paytm's situation. We also can relate to another company which listed down two to 3 days ago, which is Fino Payment Bank. And when we look at Fino Payment Bank story, the bank came up with its listing issue price of around 570, was listed down at a discount of 6 to 7%, around 540 or 545 level. Today it is 17% down from its listing price, so it is ranging around 460 or 445 or 450 at 450 level. That means this space, which was seen as a value space by lot of institutional investors, and they put lot of money, now they will start questioning their investment. That means the future investments in this space are going to be difficult. Please remember, there are many players who are scrambling for the IPO day. Probably we see some action on that side as well. So that's about Paytm, why I did not invest, and how Warren Buffett as well as Mr. Rakesh Chunjanwala's basic principle helped me form my own decision. After carefully reading various reports from various sources, I can tell you probably it is still very expensive stock. Okay, now as I said, I will also talk about the Zomato story. There are a lot of critics of Zomato also, but please remember, Zomato is little different than Paytm. Zomato is only focusing on the food delivery segment, and they want to champion that food delivery segment, and they have been a leader at least so far. Whatever money they spend on acquiring customers, so their focus is on the acquiring customer and keeping them on the platform, enabling them better services, so that they are able to get more business from the same customer. From revenue side, for every order they charge about 20-25% of commission from the restaurant player. That is their core revenue, nothing else, right? So the business model is very simple, though profitability could be difficult to achieve for them, but at least they know it is their fixed income which will be coming in. That is the difference between Zomato story and Paytm story, which market has rewarded in a couple of months ago, and Paytm's story which market has punished today. What do you think of it? Are you a Paytm investor? Did you study all these aspects, or you just fell for the hype? I'll come back and share some interesting stories about my losses very soon. Till that time, please take care and stay safe.